Hi, thanks so much for joining in. You're watching BQ Prime. This is Straight Talk. My name is Alex Matthew, and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
Now, normally there is a cause to cheer the start of the week, but there is a pall of gloom in a certain part of the world, and this is on account of terrorist activities that have led to the declaration of war by Israel on the terrorist group Hamas, which operates in the Gaza Strip region that is contested between Israel and Palestine. And that is shaping the course of global markets as we start the new week, Hira.
Absolutely. And if you see in terms of the movement as well, not everywhere there's cheer because Friday's session was pretty strong. The way Israel markets have slumped as well in terms of yesterday's session, down almost around 8%. So impact, though it's a smaller market from a stock market perspective, has been huge. The counter impact in terms of Indian markets is what we need to wait and watch from here on. But clearly now all eyes initially were on the MPC last week. Post the decision, now all the focus turns in terms of earnings, right? And it's IT companies that will start reporting earnings from the 11th. So earnings is going to be the center of focus from an Indian market perspective, and the kind of impact that the Israel war will have on different sectors, different segments, global markets as well from a trade perspective.
You're already seeing the dollar gain. You've seen crude oil prices go up, and we're focusing on that at the start today. But of course, to add to what Hiral was pointing out, there will be a few segments that you will likely see selling pressure in. On Friday, of course, you saw a second straight day of gains for the Nifty 50, and we ended just above the 19,650 mark. You had the Bajaj twins that aided quite a bit, and that's on account of the fundraise news. Of course, in today's session, all of that changes, and you could well see selling pressure, as I mentioned. But Mika is joining in to give us some perspective on this conflict and the implications that it could have, primarily on the oil market. Mika, good morning. What do you have for us?
Good morning. So Brent crude prices rose over 5% today, reaching $89 per barrel due to the Israel-Palestine conflict over the weekend. WTI prices also climbed 4%, nearing $97 per barrel. This immediate price jump was anticipated over the weekend, but the extent of this rise will hinge on how the conflict further escalates. This price increase followed a 10% consolidation in Brent crude prices in the last 10 days after crude hit an 11-month high of $97.69 per barrel on September 28. Now, Israel and Palestine aren't major oil players, and there's no direct impact on crude production and supply, but the war is in a key oil-producing region, and Iran is an important factor. Iran's connection to the Hamas attack, if officially confirmed, could jeopardize its 3.15 million barrels per day production, and the crude supply could face a risk as Iran's Strait of Hormuz, which transports 17 million barrels of oil per day, could be at risk. And the country has also previously threatened its closure back in 2011. People are also comparing the current situation to the October 1973 oil crisis, when crude prices doubled on an attack on Israel. However, this time the attacks are not in unison. Furthermore, today's oil market is vastly different from the pre-October 1973 scenario. Saudi Arabia and UAE have substantial spare capacity as the production have been voluntarily cut the past few months, and OPEC nations aren't actively trying to push prices beyond the $100 barrel mark. In terms of trade, India is Israel's third largest Asian trading partner, and while trade was majorly dominated by diamond and chemicals, trade in sectors like electronics, high-tech goods, and medical equipment have increased in the past years. In FY23, India exported $8.45 billion worth of goods to Israel and imported $2.32 billion worth of goods from Israel. India is Israel's largest weapons importer, making up for 40% of their annual arms export, and both countries are in their fifth phase of agricultural cooperation this year. The countries have also signed an MOU in May 2023 to collaborate on industrial research and development.
Thanks, Mika, for getting us the details. So the important aspect that Mika is pointing out over here is also towards not from a production perspective from Israel, but the kind of route in terms of supply which has been taken, that could be disrupted from an Iran perspective, and that could have a major bearing as well. But let's quickly welcome in our guest as well. We have David Lenox, resource analyst at Fat Profits, joining in. David, good morning and welcome to the show.
Good morning. Thank you.
David, we've already seen crude a couple of days ago hit that $98 per barrel mark. Again, a correction that did come in, and we are back again looming in those higher crude prices on the back of the Israel war with Hamas. How are you looking at the situation, and what's your read in terms of impact on pricing?
Well, look, certainly at this point in time, you'd have to suggest that we've probably seen the peak of pricing from the actual conflict itself. Usually that will happen very quickly when the news breaks that we've seen a major war event occurring in the Israeli-Hamas region. So from that point of view, that we suggest is already now locked in. It will now be very much a matter of fact as to whether or not anything happens in terms of pointing the finger at who may have planned all the attacks. So if Iran is implicated, then we will see probably a higher price occurring over the course of the next few days. But having said that, you've already suggested that there is sufficient capacity inside OPEC to cover the 3 million odd barrels that we could possibly lose if we see Iran being put into sanction. So overall, we think that we have seen obviously the Brent price and crude prices somewhat higher when we saw destruction of demand somewhat placated and stronger demand outlooks coming through. But when that disappeared, we saw the oil prices really drop away. And it's going to take something like that to really push them back towards, we believe, $100.
David, based on what we know today, and of course the fresh geopolitical issue in that region of the world, are you adjusting your range of expectation for crude oil prices?
Look, not that long ago, we were sitting for Brent with 95 to 90. We thought it might touch 100, but wouldn't stay there, that it would correct back. It didn't even get to $100 in the recent strong rally that we've seen. We don't think with this rally that it's probably going to do the same thing. We're going to keep our 95 to 90 barrel for Brent and just slightly below that between about 92 and 87 for WTI. We're not looking for a significant rally out of all of this unless we see some action against Iran. So look, overall, we think the news is now probably just going to be a matter of playing through, unfortunately, as we see this conflict wind out.
So, David, I think something like this will be a wait and watch, and depending on how far the war extends in terms of timeline, what the impact will be, we will have to keep looking at it from time and again. Thank you so much for getting us the details and joining us on the show. So clearly, Alex, if you see from a crude perspective, Iran is the key here,
yes,
more than what's happening with Israel right now. So those developments will be absolutely crucial for us to wait and watch. But apart from this, a couple of other sectors as well that will see an impact. Let's quickly run those stocks as well. Firstly, you have Indian stocks which will have exposure to Israel will see an impact, and these are in the likes of generic drugs, chips, software services, and diamonds. So if you talk about the pharma space, Dr. Reddy's, Lupin, Torrent, these could see a read across through impact on bellwether Teva. So what the impact on Teva will be, that we'll see over here. Sun Pharma, as we know, owns 72% stake in Israel's Taro Pharmaceuticals. So a major impact on Sun Pharma could be expected as well on the negative side. Talking about diamond exports and imports, now Israel is one of the biggest exporters. So yes, Kalyan Jewelers is one of the companies that could be impacted, but let's see what the impact on other jewelers like a Titan also comes back, because we don't have the exact numbers as to how much of diamond exports from Israel are consumed by any of these listed players yet. And very lastly, on the IT pack, you have software exporters with operations in Israel, specifically TCS, Infosys, Tech Mahindra, and Wipro that could be impacted as well. So that's going to be an interesting space to watch out for. And a large chunk of revenue for a Cyient DLM is a big beneficiary in terms of higher Israel spends on defense. So Cyient DLM will be another one that we will be watching out for as well in trade. So across sectors, these are just a few ones that we've identified, but
there could be
clearly
more.
the shipping costs for exporters to Israel will also go up as well. So it's going to be interesting to wait and watch and see how this impact pans out, what companies come up with as well, from their side to ascertain the impact.
And what Mihika was pointing out in terms of the importance of the Strait of Hormuz, which is a major trade route. If there are closures to that strait, which has been threatened in the past, you have to watch container prices very, very carefully, and shipping costs, of course, very carefully, because that pass-through goes to everything that passes on maritime trade. And by the way, over 90%, close to 95% of world trade is carried out through maritime routes, in case you didn't know that. So we did get a mention by Hiral of the IT companies that will be in focus on account of the conflict, on account of the war, but they will also be in focus on account of earnings. But specifically, let's focus in on Tata Consultancy Services, because apart from its earnings, which it will be discussing, the board will be discussing on the 11th, it's also considering a buyback. And Tushar is joining in to give us some perspective on what could be expected here. Tushar, we already saw some bit of a stock impact in trade at the end on Friday, where we ended, I think, if I'm not mistaken, about 0.9% higher for TCS. What are the implications?
So we did see some jump in the last half an hour of trade on Friday. The most important thing is this is TCS's fifth buyback since 2017. So the last buyback before this, if one is approved on Wednesday, the last buyback was in was in March 2022, where 40 million shares were issued at 4,500 rupees to aggregate up to rupees 18,000 crore. Before that, there was a buyback in 2020, October 2020, June 2018, February 2017, all of them in the range of 16,000 to 18,000 crore. TCS will be the third company. TCS will be the third IT company that will do a buyback this year after its peers, Wipro and Infosys, both of them which wrapped up this earlier this year. Infosys garnered 9,300 crore. Wipro garnered 12,000 crore. We also need to consider that TCS had a free cash flow of about $6 billion on its books as of March 31. So this will be an event that will be keenly watched. So in that case, along with the earnings that is going to come in on Wednesday, this will be another key event to watch out for.
Certainly. Absolutely. And this is going to be interesting to see, because usually a buyback is done when companies want to come in and help support their stock price, right? Now, when the atmosphere in terms of the expectations is slightly gloomy, I think probably this would be a right time for a TCS to do a buyback as well. But whether it will come to the support in terms of the stock price is going to be interesting to wait and watch, because we are probably going to see some impact of Israel as well. And I think Tushar will be the best one to come and give us, once he does his number crunching, on what the impact will be. Thank you, Tushar, for getting us the details. So TCS will be in focus as well on the back of the buyback. However, another Tata Group company that continues to remain in focus in today's session is going to be a Titan. On the back of the quarterly numbers that they've announced. What's interesting to see is that it seems it is a strong quarter with regards to Titan in terms of the second one. And this is in spite the festive season having a slight shift as well. Let's head across to Sesa to understand what Titan has given out and what would it actually mean. Sesa, good morning. How are you looking at the Titan quarterly numbers? What do they tell you?
Hi, morning, Hiral. So, Titan is expected to report a double-digit growth across businesses. Overall, the standalone revenue is expected to grow 20% over the previous year. The mainstay jewelry business grew 19% during the quarter, driven by a double-digit growth in the buyers and ticket size, robust wedding sales, high-value purchases in the studded category, and a healthy gold exchange contribution. The watches category grew 22% 22%, while the wearables grew a whopping 131% year on year. Now, it is interesting to note that in e-commerce, Titan's sales growth Titan sales grew more than double as online retailers stocked up in anticipation of a robust festive season sales. The eye care division is expected to see a revenue growth of 12% year on year. Now, within eye care, Titan retails a host of international brands, which grew faster than its in-house brands during the quarter. Now, as far as the other segments are concerned, fragrances delivered 14% year-on-year growth, while fashion accessories saw a 12% decline over the previous year. The women's fashion brand Tanera saw a sales growth of 64%, and CaratLane posted a 45% year-on-year growth. Now, Titan is also making healthy progress in retail store expansion. The company added 81 stores during the second quarter to take its total store count, including CaratLane, to 2,859. According to analysts, the earnings growth visibility for Titan remains strong.
All right. On that note, thanks so much, Sesa, for joining in and giving us that perspective. Of course, we mentioned earlier that Titan could also see some pressure on account of the Israel war. But let's turn to some other stocks that could be seeing action today on account of news updates. And we've got Hemant joining in to give us some perspective. To start with on MCX, because this is a stock that has seen a pretty roller coaster ride over the past month or so. At this point, it's still up about 14%. And even over the last 5 trading sessions, despite the choppy trade, it's up 5%. The latest update is positive.
The latest, right, Alex. So after the commodity derivatives platform was announced, the stock noted a upsurge of about around 9%, and then later on corrected once the derivatives platform was put on hold. But now the exchange has informed that it has received the SEBI's nod to launch its platform, which was put on hold on September 29. The proposed date for the go live is yet to be announced. But then another exchange, which is Bombay Stock Exchange, has informed that it's set to launch its options contracts on underlying commodities ranging from WTI crude to metals and so on from today onwards. This will provide market participants and FPIs a very needed means to hedge their risk given the uncertain times in terms of commodities. NSE is also set to launch its option contracts on WTI crude and natural gas today. Adani Energy Solutions, the company has acquired 100% stake in Sangod Transmission Service, and the acquisition was done at a face value of ₹10. The company is yet to commence its operations. Now, moving on to the pharma pack, where we have Biocon. The company signed its pact with Canada's Juno Pharmaceuticals to make liraglutide. Now, with this is basically a diabetes and obesity managing device, and Juno is one of the Canada's largest owned manufacturers of injectable medications with a focus on critical hospital medicines, and the total market opportunity in Canada for this drug is valued across around $100 million. Coming on to Kaynes Technology, the company announced setting up a semiconductor plant in Telangana with a planned investment of 2,800 crores. Now, this plant will be adjacent to Foxconn's electronics unit, and Kaynes Semicon is also setting up a state-of-the-art R&D center in association with IIT Bombay. Then Indian Energy Exchange, the company announced a plan to acquire 10% stake in Enviro Enablers India, a waste management tech platform. Coming on to TVS Motor, the company is set to produce the first electric bike CE02 with BMW Motorrad, which is BMW Group's motorcycle division. The production will be done at the Tamil Nadu plant, which is 70 kilometers from Bangalore, and the launch is expected to release more models in the coming 18 to 24 months. There are a couple of pre-quarter result updates where we have Bank of Baroda, where their total business crossed a 22 lakh crore milestone, which is essential because they've also noted a huge uptick in advances and deposits growth. Advances going by 17% year on year and deposits also going by around 14%. Overall, BFSI advance trend is expected to be on the upper 20 side. Closer towards 20, given the festive season coming ahead. Prestige Estates, the company reported sales of about 7,000 crores this quarter, which is double of what it reported last year. And the quarterly collections, however, remained flat at 2,640 crores. The average realizations were up about 30% to about 10,369 per square feet. So that's the summation of the
So lots to
updates.
watch out for.
Right.
MCX and BSE will continue to remain in focus. And you have some distilleries as well. It's just come out right now wherein they've cancelled the QIP. So there could be some downtick pressure on the stock because the last, when I spoke to the management as well, they were looking at a fundraise and their expansion plans were very strong. But if there is a halt in terms of the fundraise through the QIP, the expansion plans might be impacted as well. So that's going to be an interesting one to watch out for as well. Thanks, Imaj, for getting us the details. So these are a few of the stocks we will be watching out for. Another segment is in the form of the GST tax reductions, which continue to remain in focus and which was announced at the 52nd GST meet. Janani is standing by more to tell us more in terms of which are the stocks that will be impacted from the key highlights that she's picked up. Janani, over to you.
Hi, thank you, Hiral. Good morning. Of course, the GST Council meeting happened over the weekend, and we can see some of this to impact, particularly where the rate changes happen. First up is, of course, the rate reduction on millets. So the council decided that when there is 70% weightage of millets and it's sold in a powdered format, when sold in a packaged and label format, the GST rate comes down from 12 to 5. When this is sold loose, of course, it's tax exempt. But we are interested in the first one where FMCG companies, which are rolling out health mixes and product lines that are more millet-based, could see a sentimental win. This could see stocks like Britannia Industries, Nestle, HUL, see some gains today perhaps. Next, of course, is the rate reduction on molasses. This is down from 28 to 5%. This is a big win in terms of liquidity for sugar mills, and also this is a main ingredient in coffee. So even industries in that particular sense would be benefited from this move. So if we look at direct impact on stocks, we're looking at Kesar Enterprises, BCL Industries, ISGEC Heavy, India Glycols, Triveni Engineering, KBR Mills, our sugar. So a lot of sugar mills that might see a bit of an advantage today in trade. And lastly, of course, the rate clarity on ENA, or extra neutral alcohol. Now, the council has said that the ENA for human consumption will remain outside of the GST Council's purview, and it will be up to states to levy particular taxes or VAT. So this, of course, is not a financial impact directly, but a sentimental win for many of the brewery companies that have been in disputes regarding how this would pan out. So while it might not be an immediate impact, it is a sentiment.
Janani, sorry to interrupt you, but unfortunately, we're having a little bit of an issue with the connection. We're unable to hear some of what you're saying. So allow me to complete to a certain extent what you were saying. So Janani was talking about the implications for companies like Radico Khaitan, and there's also of course United Spirits and United Breweries that could see an impact on account of the tax change. Hiral.
And apart from that, the GST on molasses, that was the last part that she was going to cover as well, has been reduced from 28% to 5%. So majorly you have stocks like BCL Industries, Kesar Enterprises, IGSEC Heavy, India Glycols, KPR Mill, Triveni Engineering, as well as Awadh Sugar, which are on the radar that could have an impact, and this could be positive.
And the last part, of course, which was discussed at the meeting was the retrospective tax demands to gaming companies, which did not find a conclusion, with the government defending its stance, saying that it was already existing, and so there's no reason why they shouldn't be claiming 28% GST, whereas states like New Delhi as well as Goa standing in opposition of that. So we'll have to see how that pans out. So
watch out for a Delta Corp and some minuscule impact on a Nazara, as we know, it's only 5% of their revenue.
And of course, the management has come out on record to say that they are going slow on that business. But we've discussed a lot of stocks, and we've discussed the implications of the war of Israel on Hamas. So do stay tuned. It's just a few minutes away from the start of trade. We'll bring you live updates as and when it starts. Thanks so much for watching. This is BQ Prime.